Hello and good morning, folks. Welcome back to Almus Market Mornings, your daily dose of global financial update with me, Shikhar Garg, your host. And as we begin our new week today, there is a lot of things that we've been seeing in the financial markets over the past few weeks. And again, this week we'll have the inflation reading from US, which can be another trigger for the market happenings, as inflation has been one of the widely tracked economic indicator right now. On the other hand, we've seen oil being quite volatile on the expectations of possible economic slowdown or the concerns of economic slowdown. So, GK, I also heard some extreme drastic views by the major banks, probably of 320, 380 something dollars per barrel, and also 60 to $80 per barrel. I mean, quite interesting set of views. What do you think is going on in the markets? Can you please update?
Yeah, good morning. We had, let's start with what happened on the Friday, because we had a very important data point in jobs report from US, particularly in view of a series of weak economic data, which had led people to believe that US may be slipping into a recession earlier than expected. Jobs report was very important and it came quite strong. And the job creation, rather the non-farm payroll numbers coming at 3,72,000 was much higher than the 2,90,000 that was expected, and the unemployment rate remaining low at 3.6%, and wage inflation not rising as much as not falling as much as expected. So in all, it was a good report. There was only a small caveat that the participation rate was a lower. The participation rate is nothing but the number which tracks the how many people are employed or are searching for work. So the base number, if it is coming down, obviously the unemployment rate will also be coming down. So that is something that we need to track going forward. But overall, the number was good, despite the fact that there was a downward revision in the non-farm payroll for the previous month as well. The strength of the report was reacted to by the market, yields going across the tenors, and in fact, a 2-year shot up by as much as 15 basis points. And the dollar, of course, had already rallied well ahead of the data, because euro had fallen below 1.01 and then bounced up. And so I don't think we need a good data from US nowadays to see the dollar rally, because the other currencies have their own issues, and the trend of the dollar is so strong that people even don't wait for any data. And even if data gives bad output, the knee-jerk reaction downward in the dollar is very limited, and again people end up buying, because dollar is the king amid all these uncertainties. The uncertainties as well as the attraction of US yields are leading everyone to the US dollar. Let's go to what happened in the euro. Euro inched up closer within less than 1% of parity on Friday, but it was saved by some of the ECB officials talking about higher than expected hike in the policy rate. One member actually said that we might go for 50 basis points because of the high inflation in July, and follow it up by 75 basis points in September. Overall 1.25% hike, and this is the highest forecast that I have seen from the official side, or rather, if it is not a forecast, but it is a view expressed by one of the members, and that is actually supported the euro and kept it above 1.01. More interestingly for me, another member, governing council member, influential member, in fact, he talked about a new tool being devised to address the fragmentation issue. So that he has not given the details, nor has been leaked anywhere, not even maybe available on July 21st ECB meet, but he is very confidently said that there's going to be a powerful tool that they are devising to address the issue of the weak countries. And so it's interesting to see that they are talking all these even as we head into the ECB meeting and even as euro is nearing the parity. I'm sure some of the concerns are regarding the extreme weakness in euro, which has two implications. One is if it drops below parity and goes towards 95 and 92, as many extremes are forecasting, it's definitely going to increase their inflation much higher. That's one issue. And the other issue is that euro going below parity for a currency which was being touted as an alternative reserve currency some years back, going below parity, the confidence will be lost. And the other issue will be that European integration or the euro currency is a symbol of European unity. And if that is losing the confidence of the investors, that is not something they will like. So I'm sure we are going to see more of their vocal intervention. How much the market will respond will depend upon the positioning in the market. Now, I'm sure it's not the big guys who are selling now. It is more of speculators who are aiming for parity, etc. So once the positioning in the market gets to the extreme, I think their verbal intervention may be more effective. It will be interesting. So I'm not saying we are reversing, but I think it's very interesting. Euro is getting to a very interesting stage. More so because even dollar yen has broken 137 very clearly, although it had a slight retracement after that. And the up move in the dollar in recently has happened without any verbal intervention, which they used to do even at 134, 135 level. So when I'm very skeptical when the central banks stop speaking about the currency value, and that is when actually you might think from my experience that something more powerful may be cooking. So currency space is getting very interesting even as we head into more important events this week. Inflation on Wednesday, and then we have the Michigan inflation expectations towards the end of the week. Then 21st we have, of course, next week we have the ECB meeting followed by FOMC. So very important events to look forward to, even as the dollar is trading at very, very crucial levels. And I would reiterate that there is no sign of reversal, but these are very sensitive levels where it can either slide very fast by 3-4%, or it can have some very good support. So that's what we look forward to as far as the dollar is concerned. USD INR, of course, is no change in the trend once again, because even oil, which went below 100, has bounced back. And even if oil stays below 100, for example, I don't think rupee gets a durable support, because we are not seeing the flows, and we are still doing the heavy lifting from the market to bridge the gap between demand and supply. Therefore, their actions are ensuring that rupee weakens, but weakens in a very steady manner. And coming back to your question, Shikhar, about the oil, I think there are two extreme forecasts that is happening. One is, I think the upper side, let's say about 200, 300, whatever, I don't know what kind of number to believe in, but that is possible if there is market, there is a talk that G7 wants to cap the price of the oil from Russia at 40. If they don't, price it, below 40, insurance will not be available, financing will not be available. That kind of thing may actually lead to Russia actually stopping their supply, and which is going to increase the prices elsewhere, because everyone will shift to other places where. So that is when there may be a hyperbolic rise in the price of the oil. So that is something right now we do not know what exactly is going to happen. In fact, Russia has directly threatened Japan, who wanted to cap the price, and they said if you cap, I think you will not. You will find it will work against you, and it will go oil well above 200. That is what they have said. Other forecast on the downside is coming from the fact that some of the analysts like Citibank are saying that it will go down to 60, 65 by next year. And that is keeping in mind the recession fears that's happening, and probably keeping in mind that the supplies might increase if Iran nuclear deal is reached, and Venezuela is also already being permitted to export some of their oil. So these are very difficult to say which way the wind will blow, but we'll have to watch out. Really keeping a close ear to the ground as far as oil use is concerned. Thank you.
Okay, JK, and that was quite good. I mean, we've seen quite interesting things. Euro almost at the parity in the previous week. It needs to be seen whether any action towards that will be seen by us in the current week. And on the oil, I think yes. I mean, there are a lot of tensions going on, and if, like you're mentioning, a hyperbolic rise in oil prices, then I wonder what will happen with all the economies who, we are all already struggling with inflation and a hyperbolic rise in oil. I don't know where this will all take. While as you mentioned, cities prediction towards 60, it seems more uh, good for the economy. So hopefully we get there and not see any hyperbolic rise. Meanwhile, that's it for today, folks. We'll get back again tomorrow with another fresh round of updates. Catch up tomorrow. Thank you so much for joining.